All right, well, I'm excited to bring our next conversation as we get the ball rolling on social good, especially within the fintech space. Our next titled session is called Partnering with Employers and Financial Institutions to Drive Social Good. This time, I'm not only facilitating, but I'll be moderating the session as well, wearing multiple hats, just like a non-for-profit. I think this is an interesting conversation, and if everyone can just kind of get settled in a little bit, guys, I just want to make sure that, okay, perfect, thank you. All right, well, in today's economy, we're facing with a high inflation rate, right? We have Americans living paycheck to paycheck, right? We have a large percentage of Americans still living paycheck to paycheck. And, there's this aspect of financial insecurity that's widespread, right? And when we think about it, we also have a large population that's tapping into the gig economy, right? And as we continue to have conversations in the payment space about moving money faster and, getting access to our money instantaneously, our day-to-day, individuals within our population is facing the same. They want access to their funds much quicker than waiting 2 weeks, right? But then on the other side of the house as well, we have over 100 million uninsured individuals within this country as well, which is alarming because what we're finding that the reason for it is not necessarily that it's costly, but sometimes it's too complicated, right? It's a complicated system, similar to the conversation that we had earlier. We need to look at the overall experience of tapping into some of these areas. And so I'm so excited to have this conversation, and I'd love to introduce our panelists. If we can, maybe you guys can, introduce yourself. I'll start with Tal Clark, who is the CEO of Instant Financial. Love to have you introduce yourself.
Yeah, thanks, Amanda. Hey, Tal Clark again, and great to be here, and thanks for hosting us here. Look, everyone has had an opportunity in their life where they were trying to make it to the next paycheck, right? And it was dollars matter, right? Dollars matter and time matters. And that's what we're trying to do at Instant, is make sure that we can link them to their funds, provide access for their funds when they need it, so they're not struggling to get paycheck to paycheck on an everyday basis. We try to build out a process so that we democratize access, make sure they can gain access to those funds, and at the same time generate financial wellness tools as well.
Wonderful. Thank you so much, Tal. And we have Alex Machek, founder and CEO of Wish, which I'm excited to introduce you guys. He's also a big supporter of NAFLE, so I got to do a good job over here. Alex, if you could introduce yourself as well.
Sure, definitely. Hi, everyone. So Wish is actually a life insurance company, and I created this company 5 years ago with the goal of bringing financial protection closer to people through financial institutions. And so we develop and design financial insurance policies that we sell to financial institutions that layer on top of depository offerings. So as you're growing your deposits or interacting with your checking account, you're earning no-fee, free life insurance policies that are fully inclusive to you without requiring any underwriting. So we're really excited by that offering.
Wonderful. Thank you both for your introduction. So why don't we get started on our Q&A? Fintech for social good, when we talk about that, there's some intentions around that. And I'd love for you both to, talk to us about your organizations. You're on both different sides of the fence within the financial ecosystem. Would love to kind of talk to you guys about your why. And, if you guys can speak to how you aid in financial well-being for the consumers you support.
Sure. I'll go first.
Okay, Alex.
So, creating Wish really came from a decade of working in the financial space. I was a serial entrepreneur, building fintech businesses, helping neobanks come up. And what was clear to me was accessibility was the core differentiator. How can technology bring this through? What was lacking, though, was the story of protection. How can we help people along this journey? At the same time, many of us know who've lived through the last 20 years, we've had financial crises, we have pandemics, we have inflation, we've had job security change. And so people's reliance and relationship with protection has been kind of increased, where we look for stability and resiliency, excuse me, sorry. And so combined with all of those factors, it led us to kind of recognize that there was this gap in this financial world where, as highlighted, calculated. Many Americans are underinsured. If you have renter's insurance, you probably don't have enough. If you have a home insurance, you probably don't have enough, car, etc. And in the life insurance space, it's very large, right? 50% of Americans lack life insurance. It's even higher on the millennial side. And one of the key reasons for that we're hopefully focused on and solving for is that many Americans rely on their employer to fill that financial gap of protection through benefits. And many of those benefits actually are going away. If I were to speak about life insurance for a second, this was employer group life insurance has decreased 30% over the last 20 years. And in fact, if you're not in a managerial role, you have less than about a 20% chance of actually getting access to that benefit. So where are you going other ways to get it? And how can we help kind of fill that gap and kind of bring that opportunity to the forefront? And we think through financial institutions is the way to do so.
Yeah, and back on, again, we'll talk about access again, right? And you mentioned that, we mentioned that Americans living paycheck to paycheck. It's about 80%. So payroll.org did a survey in 2023 that said 78% of Americans believe they're living paycheck to paycheck, which is dramatic, right, when you think about it. And that access, if it's 2 weeks, and so we look at that process, and Instant, again, was started to make sure that that 2-week gap is bridged. The alternatives to that are not good, right? You have consumers who lean on credit when they shouldn't be leaning on credit to make it to the next paycheck, selling goods that they would otherwise not sell on eBay to make it to the next paycheck. And so it's very important that that access is available to them and available to everyone, right? So we've created the process so that we make sure that 100% of the employees at an organization we're working with has that access to their money when they need it.
Yeah, Tal, I appreciate that. I was wondering if you can double down on that because, what are some of the challenges that you're seeing with this population, the folks that are living paycheck to paycheck that, you guys have, it seems like you've built a solution around this. Would love to kind of hear your thoughts on that.
Yeah, the challenges are many, right? Again, you don't see workers respond well if they're having trouble with access or they're living paycheck to paycheck. We want to see them, it helps that they show up, right? And they show up better if they know they're going to have access to the money. It helps make sure they don't show up when they're ill, right? Because many do if they need to work just so that they have access. And it's not just wages, but it's tips as well. Right. And so the complexity of how you access money when you need it is complicated when you don't have access to your paycheck. And so we're trying to bridge that gap.
Yeah. I think this concept of access is really important, especially our last panel, right? We're noticing that this concept of expectations, the consumer expectations, is really important. We live in an economy where we want everything tomorrow or yesterday, in fact. And, I'd love to kind of, lean on you, Alex, and, really talk to us about what you've learned about consumer expectations with Wish in terms of the products and services that you provide your consumers.
Yeah, I think the first thing I learned jumping into the insurance space is that, Americans don't hate insurance, they hate paying for insurance. And so if you can find a way to give it to them as a benefit, there's actually a deeper connection that they have with that underlining. We see this on the employment side, right? Choosing your benefits of who you work for. But we also see, even if I go on the financial side, on the credit card side. Yeah. So when we were looking about people's relationships with insurance, we would notice that on the credit card fund, people were choosing their credit cards based on like their tier 1, like what is the cash back? But then what was like, we thought maybe tier 2 levels were getting access to airport lounges or VIP access to events or other things. In reality, it was all protection benefits, travel protection, rental car protection. And then those same individuals who were choosing credit cards that were focused on a specific need, like an airline credit card, then that travel protection actually became a tier 1 protection. And so they just realized that they do value it, they are thinking about it, but it's where it lives within their day-to-day needs. And if you think about insurance as a whole, many of the insurances we purchase is due to the fact that we have to have the end result we want. We want to drive that car, we have to have auto insurance. If we want to own that house, we have to have home insurance. Mm-hmm. But when we think about social good and think about financial wellness and becoming financially protected, those types of insurance, like life insurance, are ancillary, are not required. And so in many cases, it requires us to go out there and sell, and convince you to buy it. Mm-hmm. And because it's really low on your list on your financial journey. But what we think from an accessibility standpoint is that if we can bring it to life through financial institutional products that you engage with on a day-to-day basis, using that same model we see on the credit card side, which is what we call proactive protection, it follows you along on your financial journey, we'll see a deeper connection with that relationship. And that was really our goal of kind of bringing that to the forefront.
Yeah. It's so funny. We did get a chance to listen to the Consumer Reports earlier, and they talked about trust and safety, being transparent. And as we're talking about access and consumer expectations, there's a speed aspect of that. But we also need to be safe. And so I'd love, Tal, for you to talk about the risk and compliance aspect of, having access to your wages much sooner than, the 2-week period.
Yeah, no doubt.
Yeah.
And to your speed point, 87% of Americans want access to their pay today. And that's driven by, you mentioned Netflix, Amazon. We're used to instant gratification in this society. And that's carried through to payroll now, right? Okay. Mm-hmm. So they want that, but they also expect that it is going to be secure and it is going to be compliant. So that's a significant focus of ours as we're moving money. We make sure that they have an app that they understand. It's simple to use. It's engaging. They can use it wherever they would like to use it, and they can transfer money to that app if they like to move money to another place or another bank account. So that's all available to them. And then we work with the states and with federal regulatory agencies as well to make sure that we're doing the things that make sure, first, access is provided, again, to all consumers. They all have equal access to it. But we're also delivering it in a way where it's free access as well. So they have options to move the money around if they would like to. But in many cases, they choose to use a card and access it at no cost, or they choose to transfer it to a bank account at no cost. We think that's important, that we're not just providing access, but we're providing it in a way that's reachable for everyone, and it's not costing them to access those funds when they need it.
Yeah, that's wonderful. Yeah, I truly appreciate that. And I'm sure, Alex, it's the same case in terms of, having trust and safety and security within the products that you provide with Wish. I'd love to get your thoughts about that as well.
Yeah, I think, because we're a business-to-business consumer company and we are selling directly to financial institutions, they care a lot about the security and protection of what we're doing. I do have the advantage of being an insurance company, so we're as regulated, if not more so, than these financial partners that we are selling to. But in the conversations with them, we've really focused on how can we bring an offering to the table that requires the most minimum of PII, or personal identifying information, needed to deliver the end experience that we're selling to them. And so in developing our solution, and it took us over 3.5 years to bring this product to life, it was really focused on looking at the institutional's experience and how can we not disrupt it, but piggyback on that experience and layer in without needing them to kind of disrupt what they're doing, and again, to that PI perspective load. So by doing a lot of these things, it made it really easy for us from a selling perspective to go in and say, hey, we sell the policy to you. You are our customer, not your end customers. And ultimately, you're gifting it to them as a benefit to help in your story of deposit economics and strategically differentiation. And that allowed us to really break down those barriers.
Yeah. Yeah, thank you so much for that. I appreciate that because it's a good example of how partnerships is an accelerator, right? And we all know that within FinTech. FinTech is all about the partnerships, all about the collaborations. And so I'd love to kind of switch over to this theme about this concept of partnerships. And, love to get your thoughts on what you guys have learned with your own individual organizations and the partnerships that you guys have. And maybe, Tal, you can go first because I know you've partnered with, organizations like Visa and MoneyLion. Would love to get, your, I don't want to say war stories, but, but I'd love to get your stories on how those partnerships have accelerated your organization.
Yeah, no, it's great. And I think in the fintech world in general, there's not much that can be accomplished working by yourself. We're dependent on banks. We're dependent on processing platforms. We're depending on Visa for plastics and branding and network services. So we're dependent on all of those just to deliver the base service and the access that we provide. And then we take it to another level because once we get to access, we think it's really important that we start building additional financial tools and really start creating a financial wellness environment And that's what we've done. Just over the last year, you can now go within our app and you can access rent reporting, which, many times, many of the employees that we're serving are renting. That does not allow them to build credit at all. Rent, if you weren't aware, when you pay rent, it has no bearing on your credit score. And that's important. That's one of the large expenses for someone who is renting an apartment. And so now we've partnered with Self so that rent reporting now goes and positively impacts their credit report. It cannot negatively impact their credit report, which is good. We also partner with MoneyLion to provide high yield savings account, which that access may not be available in many cases, and then and with Visa for other services as well. So we think it's important that we put this entire financial wellness program around the employee, not just about having access to your money, but having access in your money and learning how to spend it wiser, use it wiser, in education and healthcare as well.
Yeah. No, I think that's great, Tal. I'd love to also get your thoughts, Alex. I know your organization works with a lot of financial institutions, but it's also the local institutions like the regional banks, the community banks. Love to get your thoughts as well.
Yeah, just a question for the group. Who here is selling to financial institutions today? Anybody out here directly selling? Just a few. So as you might know, move fast and break things is not what you should be doing. You have to move slow and secure. And one of the things that we've learned over time too is that these institutions have committees. All right, there's not one decision maker who you can kind of sell through to. And so you're really having to help them kind of show their story that they can bring it to life. So a lot of our effort to getting our programs into market is reverse building, board memos or community memos that help them kind of sell it upward to their SLT members and commitment in that way. And that's kind of been a lot of our main focus of building the trust and relationship and going through that experience.
Yeah, I love that. I know we have a few more minutes, and I'd love to. I love piggyback on what the last panel did, but more thinking of advice, because we have quite a few individuals here that are product builders, folks that are in the fintech space, advisors, consultants, and we're all trying to build an ecosystem that's good for all. I'd love to get your advice on what you guys would give these product builders and these innovators like yourselves. Alex, would you like to go first?
Yeah, I think for me, it's always about keeping it really simple. I think as product people, you want to keep adding the next feature and the next feature, and we have read this and heard about this, but it really is true. If you're selling something, you're trying to get people to adopt it, pick the one thing that you really want to do well, focus on that, and just kind of work around that model. And for us, that's been core in regards to ability to sell, right? We go to those institutions and we say, you offer credited interest rate today, you offer free checking, you offer, fraud protection. You don't offer any true protection elements that are connected to that reward people for doing actions that are strong, which is savings and growing your savings. Let us show you how to do that and kind of layer and push back on that one point. The other thing I would add too, as you're building tools, is I think in the social good space, there's two sides. There's the education side and there is the tool side. And I think you need to decide what element you want to be. And because as you're talking to these partners, you're able to kind of really focus on hey, we're going to help you understand your money better, or we're going to educate you how to use that money better. And we've seen that work well by choosing a path.
Yeah, wonderful. Tal?
Yeah, a couple of things. I think we can all continue to make partnerships easier. I think that generally we all find ways to work together, and sometimes it might take 6 months. In many cases, though, we'd like to see it take 6 weeks at most. So continue to find ways that technology can link us together. I've always found it. I think a lot in our business find it great to work through employers as well. So we continue to try to connect with employers from a fintech perspective. Whether it's via, and for us, we work both across fintech and HR tech. So those partnerships are things that we're building as well, so that we can connect to data via census file. We can connect to data via time and attendance files, so that we can build more financial wellness tools and make those more easily accessible for employees. So I think as we evolve and we continue in the fintech space, it's just about making our technology easier to work with. And make it more readily available for the consumers. And in our case, and I think in many cases, we found that the best way to do that in many cases is through the employer. So continue to find ways to do that.
Yeah, just a question for you, and I know we've seen it, is selling to these fintechs, you have to accept that you're going to have to integrate with these cores, and that's unavoidable. Many of them, especially the smaller institutions, they don't use these cores just as ledgers. They use them as their product development and launching platforms, and so you have to be in there. So you have to commit dollars and development time to build into the FISs, the Fiservs, the CSIs, et cetera, to be able to get these relationships off the ground.
Wonderful. No, wonderful. This track is super special, and it's really important to see folks like yourselves representing, fintech for social good and aiding in all the impacts for our, providing our consumers a healthy financial ecosystem. So thank you both for joining my panel today, and I'll see you guys next time.
Thank you.
Thank you.